Hey, what's going on, everybody? It's been a long minute since I did a video, so I figured I'd do one today. Lots has happened in the market since the last time I did a video, but I've been in India again for the last couple of weeks, been enjoying myself, also been kind of really sick, so kind of bedridden. I figured, you know what, I'll do a video update for y'all, for those of you who are still trying to grasp and understand what's happening in this market, okay? So let's start off with a smaller time frame as always, right? Let's get to the 30-minute chart, and here we are, right? So all we've seen over the last maybe 24 hours or so is a big wick up almost to $7,700, and then downside movement with a nice follow through with lower lows right there, right? And now we're seeing some higher lows and potentially a higher high coming up right here around 73.85, $7,400, right? And I got into a nice entry around 75.25, and my stop, I lowered it right into profit just in case, we get another sort of wick like this over here. This way I can at least get stopped out in profit, because we've been seeing a lot of wicks like this. If you look right there, this is a decent sized wick as well. This is a pretty sizable wick right there. So anyway, so you're probably wondering, okay, so what is exactly happening in this market, and why are we getting these wicks? Okay, so for the most part, the market, when it starts having erratic movements like this, is it's trying to break through one direction to resume its other direction, because the payout to the other side will be less heavy, right? So for example, if there are a good amount of shorts that are still holding their positions and they had their stops, let's just say, somewhere over here at the high of these wicks, or maybe and just they started getting into short positions in here or in here or in here, they probably set their stops up here, and up here, and so those positions got cleared out of the market, right? So that means that when prices do go down, okay, the shorts will get paid less because there are less people holding the shorts, and there are probably more people actually holding bags for the longs. Because remember that for each short, there's an equal amount of longs on the other side. Okay, so when people say that there's 3 million outstanding longs, and then there's 2 million, say shorts or something, that doesn't mean there's more longs than shorts. It just means that that's how many longs and shorts there are on the order books that are open and ready to get filled on the positions. The amount of longs and shorts are always going to be equal, okay? So the point of these wicks is that, this is a good way to sort of clear up the shorts and then get people trapped in some longs, by FOMOing into positions. And then make those same people who got into these longs feel the pain once price starts heading down, okay? And you could see ultimately, for the most part, people are still tending to sort of forget the ultimate direction that the market has been, which is an overwhelming downtrend. So if we start looking at, say, the 4-hour chart right there, right? Actually, this is a better look right here. This was sort of the parallel channel that I was following, right? And once this yellow channel sort of broke down right there, you can see price actually sort of came back to that same parallel channel, hit it as resistance, came back down again, hit it as resistance again, and hasn't really done much. I mean, price really is still going down, right? There's really no change in the market. Now, you could make the argument that, hey, we spent almost 2 weeks or so in this kind of movement right here, but that's sort of a drop in the bucket of what we've been doing for the last couple of months, right? I mean, this is just, say 2 weeks of movement that we've had that looks like quote unquote upside, So the average sort of retailer's mindset is that of a goldfish, really. They often forget that we've been in a 4 to 5 month downtrend, but they're very quick to pick up on, hey, we've been in a 2 week, higher low structure, right? So you got to pay attention to the larger time frames at play, which is that, again, start looking at, from June, July, all the way down to where we are right now, which is December. I mean, that's a good, 5, 6 months of downtrend. And that's not easily forgotten when, all you've really done is move maybe, I don't know, 10-15% up, right? In the sights of being down 50 to 60% almost, right, from this high. Okay, so keep that in mind, when you're looking at, hey, is this potentially the bottom? And if I am, if this is the bottom, am I missing the bottom? Even if you do miss the bottom, right? I mean, if we're truly supposed to start a bull trend, at least wait for confirmation to have price start breaking some critical areas. Okay, so some critical areas, like I've said to watch is, first thing I said, watch this descending trend line right here, this dashed trend line that you see. Watch the breakout of that, right? Excuse me. Watch the breakout of that and then see if you can get a retest off that trend line and then push up, okay? Now, I'm not saying that, watch the retest of that and then, wait all the way up to 9,000 or 10,000 buy in, but at least wait for some critical areas for you to, get bullish on price action. So the first, key area that I said was this purple block right here. Remember, this purple block right here was that first, big SR level that helped propel us from 7,400 all the way to 10,500. So of course that's going to, sort of give us some resistance, some struggle. You can see it was resistance right there, resistance right there. Once it broke down, broke above, tested it as support, tested as kind of support resistance right there. Didn't really know what to do in this chop, and again, it's testing it as support, right? So all you can say is price is really hovering in this, purple block right here, unable to resolve if we're going to break up or down. And if it's not able to resolve if it's going to break up or down, you could still say that the chances are higher that the trend is going to break down because, again, even if you look at the trend since end of October, the trend is down like that. If you look from, end of June or even over here around August, you can say the trend is still down, right? Because we're seeing high right there, lower high, lower high, lower high, and then more importantly, low right there, lower low, and lower low. Okay, so on every single time frame, whether you look at the 4-hour, the daily, the weekly, and even the monthly, it's, I mean, kind of a pretty obvious, downtrend, right? So that's sort of an inexcusable, a hard sort of point to argue, you know. So you're probably wondering, okay, so what do I do with this information? All right, so there's a couple opportunities that you can, make out of this, right? So first things first, you can map out maybe a trend line like this, and you can say, okay, well, we're seeing maybe, some trend line like this. You can ignore this because, I mean, for the most part, you get a touch out of here, a touch out of here, 3 touches out of here, right? And you can make another separate trend line kind of like this, okay? So we got 2 separate trend lines that are coming about that are giving us potentially higher low structures. But remember, after this high was cemented, all we're seeing is, lower high, and lower high, right? So it doesn't really make much sense. I mean, yes, we're getting higher lows, but we're also getting lower highs, okay? So you could say, okay, well, I could still potentially be long because we are still getting higher lows, and I believe price is going to go higher. So your price stop will probably have to be at the very least, where this is right here. So if you look right there, okay, this was really the first stop. Actually, no, it would be right here. I'm sorry. This was really the first big hammer that we got, where we got the first push up. This push down basically stopped out these long positions. So this to me was basically a deviation and then push back up, right? And so this is really the range high, okay? So this is the range high right here. This is the range low right here. So the range high is right around 7,300. Notice where price is right now. We're actually hovering right around $7,300. So you could take a long position right here, place a stop, just below this green marker, or a conservative stop would be right around here, around 7,050, right? And start targeting, at least this area right here as a potential target profit, and then this area right here as a potential target profit. Okay, I guess a more sort of aggressive target profit would be this block right here of consolidation before we had the breakdown. So I mean, that's also a possibility. I do think this is much tougher than accomplishing this target profit or this target profit. Currently, I'm actually in a short position I got into 75.25, and my stop is right around 76.75. I got a 1.5% account risk. I got stopped out twice before that, so I do want to show you guys that. It hasn't been easy or smooth sailing for me either. One, I've been really sick, and it's been hard to trade, when I've been sick. But I've had actually some, pretty decent trades too. I mean, this one I got stopped out in profit because my entry was 74.70. My stop was around 73.65 right there. So this profit kind of took care of my stop that was hit for a loss, and another stop right here that was hit for a loss. So I was sitting in, maybe 4% average profit overall. And now I'm sitting in some pretty decent profit right now because, my entry, like I said over here, right, was for my short was around 75.25 right there. My stop, I reduced it into a trailing stop around 7,500. So just in case this wick happens, I don't have to deal with this garbage, and I can sort of rest easy, right? So that's really where I am. I still believe my overall directional bias is still bearish. Whether you want to think that I'm sort of a perma bear, you know, the time frames will not do you wrong. The technicals will not do you wrong, right? And you could see, this is another thing that I pointed out, that the December monthly open, which is, something that I pointed out multiple times to our Advantage members, is watch for the key monthly opens. Watch where they open, and watch how price gravitates towards the monthly open. Look how the December monthly open has capped price right there. The monthly open right there, right? Notice not a single candle on a 4-hour time frame has been able to close above that. I mean, forget the 4-hour. I mean, the daily has been aggressively struggling to even open and close above that, on a clear open and close daily basis, right? But more importantly, the shorter time frame, 4-hour, pretty clear picture. Whether it's the algorithms or the professionals, they do not want price closing above this. This is where they're drawing the line in the sand. They're saying, hey, we'll allow these garbage wicks like this, but we're not going to let the price close above this. So the bearish bias is still maintained, right? And so my short, every time I short, even if I get stopped, I'll just keep loading up on shorts, right? Because remember, I get stopped at some smaller losses. But when I get profit, I make some pretty sizable gains, okay? I'll show you guys. I mean, this was over here, 31% profit right there, 39% profit right there, right? So when I'm making profit, I'm making some massive, even over here, 11% profit. And when I'm getting stopped out, right, I'm getting stopped out in some, nominal losses, like 2.5% loss, right? 4.4% loss, 4.7% loss. So you could see my, losses are pretty small. And when I'm hitting profits, I'm hitting double, my losses, right? So that is essentially the point of trading, and essentially the point of trading technicals with proper risk-reward ratios, okay? And once you sort of understand that this is really a numbers game in the markets, then you sort of, stop caring about getting stopped out. And honestly, sometimes getting stopped out is honestly the best gift that you'll get because it frees up the capital, and it also helps you understand that some significant structure was broken. Now let's reassess the market, okay? And once you get time to reassess the market, then you can start looking at, hey, has the directional bias changed? Has anything, sort of key in terms of SR levels changed? If not, then still maintain your overall directional bias, still maintain, your shorts or, whatever positions that you're sort of maintaining, and keep trucking, right? Don't sort of, forget about the overall higher time frames and what they're telling you. Forget about crypto Twitter. Forget about all these garbage analysts, what they're telling you that, hey, this is the bottom, this has happened. I mean, aside from that, we've still been maintaining in my community this 200 weekly moving average. And I've said before, over and over again, this is exactly what I'm looking at. 200 weekly moving average, and I'm looking at this consolidation block on the weekly. I'm looking at $5,000 to $5,500. I don't care when it's going to happen, but I'm fairly confident that it should happen. If it's not going to happen, then this thing will at least start giving me higher highs on at least a daily or a weekly time frame. And if I'm wrong, then I'm wrong. And if I'm wrong, right, I'll get stopped out of a loss, okay? And then it's going to be a bull market anyway. So it's going to be happy sailing for the most part, right? Then I'll ride the longs. I don't care about being a perma bear. I'm just saying that this is a direction that the market is showing me. So why would I start longing aggressively? I mean, unless I'm scalp longing, why would I start longing aggressively here when I know the overall direction of the market is down, right? When I know ultimately the technicals that are really looked at, that most traders tend to follow, is this 200 weekly moving average. And I've showed you guys this before. Remember, technicals are great because a lot of people follow them, right? People say that technicals are a self-fulfilling prophecy. Yeah, they might be, but who the heck cares, right? They're a self-fulfilling prophecy because a majority of the traders are looking at it. The bots and the algorithms and the professionals are looking at the same things, right? So why would you not want to look at the same things that they are? Why would you not want to buy or hold certain key levels, or buy certain key levels, or sell certain key levels that they're selling or buying, right? That is the whole point of technicals. It's where a majority of the mass of people come together with a collective bias saying, hey, this price at this point is heavily undervalued, or this price at this point is heavily overvalued. And once they agree at that certain point, that's where you start getting, technicals match up with the majority of the crowd. And then you start seeing, the 200 weekly moving average like this, hold right here, hold right here, hold right there, hold right there. And why should it not hold again if price drops all the way down to about $5,000, $5,100 in the coming weeks ahead? Of course it should, right? If it doesn't, that's a different story. That means the whole narrative has changed. That means that the professionals and the algorithms and the bots were not able to sort of uphold the selling pressure. That means the overall sentiment of the market has changed, and then we start looking for new technicals. If it doesn't hold, it doesn't hold. But the point is, you should assume that it will hold and place your stop just beneath it, so you know that if you're wrong, you're going to be stopped out at some nominal loss. But if you're right, the technicals holding will pay off like this, right, in the long run with a massive, massive gain, right? So again, technicals are important because a lot of people look at them. Okay, a lot of people pay attention to them. A lot of people trade off them. Technicals are not some voodoo magic. They don't just magically work. It works because the smartest people, the bots and the algorithms, are trained to look for certain key levels where most people assume, and they're looking for random levels, right? This is why Fibonacci levels work. This is why certain key SR levels work. This is why certain moving averages work. All right. Okay. Enough sort of blabbering. I think I've given you guys some decent information to look at. I'm still maintaining my overall bearish bias. My entry is 75.25. Stop is 7,500. Targets are in the green right here. I think 71.75. 6,900 and $6,600 are generally my stop, or I'm sorry, my target profits for my short. That's if this turns into a swing. If not, if I see, some massive sort of demand step in right around 71.75 or say 6,900, I'll just, close out my position manually and walk away. For the most part, I'm not available to, sort of provide updates, every couple of hours, nor am I available to watch my position every few hours. That's why I'm generally just in my Advantage community. Whenever I can chime in, I chime in. I let my community members know exactly what I'm looking at with some quick text updates, or I'm posting a chart, or I'll request our other analyst Jordan to do so. He's been doing a fantastic job holding this down, making some great gains. So do come join the Cryptosomniac Advantage membership, folks. I'll be back in the US in the next 5 to 6 days. So then we'll start making some gain season happen again right before Christmas time. Get some good gifts for us, with these gains, right? All right. I think you guys know, what the deal is. Again, keep following our videos, folks. Give us a like, give us a comment. I hope you guys enjoy our content. Thank you always for watching. Come join the Cryptosomniac Advantage membership, or you will see a YouTube Discord free link where you can join the free side of the community right here in community discussion. And I hope to see y'all there soon. And happy hunting, all right? Cheers.